Bursa Malaysia says it will consider listed companies' applications for lower public shareholding spreads following a review of the main market and ACE market listing requirements. Currently, the companies are required to have at least 25% of listed shares in the hands of the public under the amendments that will take effect on March 1st. The bourse operator said public listed companies with a market capitalization of 1 billion ringgit or more but less than 3 billion ringgit may apply to be considered for a minimum acceptable lower spread of 20%. For those with a market capitalization of 3 billion ringgit and above, the new minimum acceptable lower public spread is 15%. The market capitalization criteria aside, Bursa said it will consider applications for a lower public spread based on the appropriateness and rationale of the application. This includes sufficiency of liquidity, orderliness of trading of the securities, good corporate governance conduct and compliance records of the company and its directors, as well as reasonable justification necessitating the lower public spread. Bursa said the amendments will promote greater transparency as well as regulatory clarity and certainty on the policy considerations by the exchange in accepting a lower public spread. Still, it encouraged eligible listed issuers and those granted with a lower public spread to maintain at least 25% public spread to promote wider participation of investors and a more liquid market. Genting Malaysia's Resorts World Genting says it has spent over $800 million on its long-awaited outdoor theme park Genting SkyWorlds. In a virtual briefing today, Resorts World Genting Head of Business Operations and Strategies Lee Tiam Kit acknowledged that it has taken a number of years to complete the theme park. But the finishing touches are being put in place, and Genting SkyWorlds should finally open to the public by the middle of this year. The theme park spans 26 acres and will have 26 rides and attractions to accommodate 20,000 tourists. Genting SkyWorlds will also incorporate 20th Century Studios brands and IPs, including Ice Age, Night at the Museum, and Planet of the Apes. This is made possible through a strategic collaboration between Genting Malaysia and 20th Century Studios. Resorts World Genting Executive Vice President of Leisure and Hospitality, Edward Arthur Holloway, said the focus in the next 6 months to 1 year will be on domestic tourism and the family market. He also stressed the group will put health first, attracting its desired number of visitors in a very controlled manner. The government, through the Inland Revenue Board, obtained a judgment in default at the KL High Court last week against 1MDB's Jasmine Lu Aiswan over her unpaid taxes amounting to 2.49 million ringgit. A judgment in default is one that is entered in the plaintiff's favour on its application, owing to the defendant's failure to plead or contest the claim. Sources confirmed to theedgemarkets.com that the judgment was entered on Thursday against Lu, formerly the ex-General Counsel of 1MDB. She is also faced with the prospect of having her apartment in Mont Kiara, Kuala Lumpur auctioned off. This is after OCBC Bank Malaysia filed a suit over her alleged failure to settle an outstanding loan sum of 308,375 ringgit. Lu is one of the key players in the 1MDB saga and is said to be a close associate of Loh Teck Joe. She had left the country prior to the 14th general election on May 9, 2018 and is being sought by the authorities. Petronas Chemicals Group says fourth quarter FY20 net profit rose 37% year-on-year to 466 million ringgit on higher plant utilization rate. Revenue, however, slipped by 9% to 3.85 billion ringgit, largely due to lower sales volume and product prices. Earnings per share rose to 6 cents from 4 cents previously. Petchem declared a second interim dividend of 7 cents. As for its full year, earnings were down 42% to 1.63 billion ringgit, while revenue fell 12% to 14.36 billion ringgit. In a statement, Petchem MD and CEO Datuk Sazali Hamzah called 2020 an exceptionally challenging year. However, The recovery momentum seen in the fourth quarter has continued so far in early 2021, and he said the group can expect improvement this year if demand for petrochemical products continues to rebound and crude oil prices remain at above $50 per barrel. Nestle Malaysia posted a 0.5% uptick in fourth quarter FY20 net profit to 132.47 million ringgit, as revenue rose 3.1% to 1.37 billion ringgit. In a filing to the Bourse, the consumer goods giant said top line was underpinned by sales in out-of-home channels as restrictions eased in the second half of 2020 under the RMCO. Earnings per share rose to 56.5 cent from 56.21 cent previously. Nestle declared a third interim dividend of 92 cent per share. For FY20, Nestle's net profit fell 18% to 552.71 million ringgit on the back of relatively flattish revenue of 5.41 billion ringgit. In a statement, CEO Wan Aranos said the improved quarterly results are a credit to the group's efforts in driving growth opportunities across all brands and channels in these challenging and competitive times. He added the accelerated rollout of product innovations was also a key growth driver during the quarter. On its prospects, Aranos said COVID-19 will continue to have repercussions, especially through the first half of the year. Margin tensions may also be a challenge, with a significant rebound expected in the prices of key commodities.